So the Workforce Disclosure Initiative is an investor-backed initiative which aims to improve corporate workforce reporting and the quality of jobs for people working in companies' direct operations and their supply chains across the world. Launched in 2017, the project centers on an annual request for data, which targets the world's largest companies by market capitalization. Through high-quality data and research and skilled engagement with investors and companies, we're driving up the quality and quantity of workforce data disclosed by listed companies, enabling a far better scrutiny of how companies are observing fundamental human rights in the workplace, not just in their own operations, but in their supply chain. Indeed, we've heard from investors that there's this gap in the market for a disclosure platform that's similar to CDP for the social dimension of ESG, and that is the gap that we're trying to fill. And what do we want to achieve? We want to increase workforce disclosure in both scale and scope, and that means the quality and quantity of workforce disclosure. To enable investors to be more actively engaged with companies to improve workforce policies and practices. And to be a thought leader on workforce practices, to perform and publish analysis based on the gathered data. And our ambition continues to grow along with our signatory base. This year alone, we have increased the number of investors by 10, which includes some of the big names on either side of the Atlantic. This includes large mainstream funds like Neuberger Berman and BNP Paribas. We've also gotten smaller ESG funds on board in the US, like the Investor Coalition for Responsible Investment and Parnassus, and ESG Portfolio Management in Germany. Finally, household names like Jupiter Asset Management in the UK have become a signatory. But of course, increasing the depth and breadth of our engagement with existing investors is equally important. In 2019, we facilitated more dialogues between companies and investors on workforce disclosure and practices than ever before. Nearly 300 to be exact. Champions include BMO Global, Domini Impact Investments, Castlefield, Edentree Investment Management, and Newton Investment Management. This year, Share Action, the WDI, and Sycamore Asset Management convened asset managers and corporate representatives to share insights on the challenges and opportunities faced in relation to the recruitment, retention, training, and development of female workers from the boardroom to the shop floor. This group spoke candidly on the issues of data collection, cross-communication, both internally and between shareholders and their investee companies, target setting, and best practice on the topic, which helped create a mutual understanding of challenges faced on both sides and lay the groundwork for constructive action going forward. These types of convenings is something that is very important to the WDI and something that we will be doing much more in future. And if you'd like to get involved, you will hear more about that as and when these thematic engagement groups are scheduled. Our global footprint has also been enabled by our strong governance structure and our partnerships with SHARE, the Shareholder Association of Research and Education in Canada, and RIA, the Responsible Investment Association of Australasia in Australia. In terms of company growth, the survey has grown consistently since its origins in 2017. In the inaugural cycle, 34 companies disclosed the initiative. In 2018, this more than doubled, with 90 reporting companies. And last year, 118 companies disclosed. The data collected enables investors to improve their understanding and engagement of fundamental human rights and workforce practices. Again, just a little bit more information about company engagement in 2019. We had 118 companies from 17 countries across the world. 3 of the biggest mining companies, BHP, Rio Tinto, and Vale, and also Anglo American, which comes in at number 8. 4 of the biggest energy utility companies, National Grid, Enel, Dominion Energy, and Iberdrola. 3 of the four biggest car manufacturers, Toyota, Volkswagen, General Motors, and General Motors. And our first companies from Russia, South America, and Africa. These are just some of the testaments that our companies have, companies disclosing the initiative have made about the WDI. We're looking to increase communication between departments, to improve operational efficiencies and oversight into direct operations and supply chain, and ultimately to improve practices in workforce management. As mentioned, our ongoing ambition in 2020 is to grow our US company and signatory base. Building on a fruitful landscape last year with the Business Roundtable pledge and proposals to modernize and standardize the disclosure criteria around workforce issues in direct operations and supply chain, we embarked on a roadshow in the US to expand our investor engagement, our funder relationships, and also our partnerships with civil society. We had really important and progressive discussions about how the WDI could align with existing and forthcoming initiatives, including SASB and the WBA, and open and honest advice about how we can position ourselves in the US. So watch this space. Okay, I've given a little bit of background, guys, on the WDI. And I hope for those of you who are well aware of the initiative that didn't worry you too much. But what I want to do now is get our panel involved. So as mentioned, we have John Mole, who is a responsible investment analyst at EdenTree Investment Management, and Chloe Smith, a senior executive of investment management at Castlefield. It would be great, guys, maybe starting with John, if you could introduce yourselves and your respective funds.
Yeah, sure. Thanks, Anya, and afternoon, everyone. So EdenTree, we're a relatively small investment manager, about 3 billion sterling under management. Our ownership structure's a little bit unusual. We're ultimately owned by a charity, the All Churches Trust, and partly due to the history of the group, we have a long history of ethical investing, which dates back to the late 1980s when we launched one of the UK's first ethically screened retail funds. More recently, at least for our screened funds, we've articulated our investment process as responsible and sustainable investing, but we've kept a real sort of ethical, values-based underpinning. So we have a dedicated responsible investment team, which I sit on. It's 3 people, and we have the ultimate say on whether stocks are suitable or not suitable for inclusion in the screened funds. In terms of the screening process, we integrate the sort of traditional ethical exclusion criteria, so weapons, tobacco, alcohol, gambling, with ESG risk assessments. These look at human rights, employment and labour in particular, relevant to the WDI. And we also identify thematic positives focusing on education, health and well-being, sustainable solutions and social infrastructure. Once the companies have been bought for the screen funds, we conduct engagements across a range of environmental, social and governance topics. Sometimes that will be unilaterally, so just EdenTree, and sometimes it will be alongside other stakeholders. And organisations such as Share Action, the PRI, are really great for sort of convening groups of shareholders on specific topics.
Thanks, John.
Hi. Can you hear me now?
Yeah, all good, Chloe.
Perfect. Great, thank you. Thanks, John. Thanks, Anya. So, welcome everyone, and it's great to hear that so many people have dialed in. So, as a quick overview of Castlefield and who we are and what we do, we're a Manchester-based investment manager, and like EdenTree, we also have an unusual structure in that we are co-owned by our employees, and we're also owned by a charity as well. So when Castlefield was established in 2002, we originally was an investment management business, and we had the backing of a charity called Burden's Charitable Foundation, and they're still very much invested in the company today. So investing for charities has been a key focus from our outset, and it still is today. So naturally, we have always been involved with ethical investment in some form. We acquired 2 ethical advisory businesses in the early 2010, and since then our retail client base has grown significantly. So now we're an integrated investment manager and advice firm. We run 6 of our own in-house funds with a special focus on UK and European markets, and all our single strategy equity funds apply an exclusion screen. So what we mean by that is that we would exclude certain sectors or industries which we would feel that operate in a contentious industry or sector. But we'll also consider things that can't necessarily be screened out by looking at the industry in which it operates in. So we'll look at social issues, its environmental credentials and governance factors, and that's obviously where the WDI comes in. But we also have a bias to companies which show positive attributes, again, to have a good human rights record, and again, environmental credentials and all that. So as I mentioned, we have a key focus on UK and European markets. So where we don't have exposure, we will use third-party funds and Eden Tree. So John will use their funds. So it's great to be part of a collaborative engagement like this, so we can work with John and Eden Tree, and we know that where we're putting our clients' money in third-party funds, our interests are aligned.
Thanks, Chloe, and guys, that's great. So I guess before we get into the top ESG trends, I wanted to touch on the social reporting landscape more generally. And something that I've heard recently from companies is that the importance of social reporting is just not relayed to them when they speak to investors. My first question is, how do you make sure that your investee companies are aware that these are important material issues to you? And what would you say to companies who have yet to hear of its value? Chloe, maybe we can go to you first.
Yeah, so when we speak to companies, because we are engaged shareholders, we've heard similar comments as well. So it's quite interesting that these questions aren't being asked. I think in the industry, a lot of focus has been on the E and the G side of ESG, and the social issues have kind of been put to one side or forgotten, but I think that's starting to change now. So as I said before, we will consider social issues before we will even invest in a company. So these issues might be workforce topics, or it might be turnover, diversity. It also might be looking at its supply chain. So I think it's really important for investors to engage with its investment holdings. We engage throughout our entire investment period. And I think that in the industry, it seems like ESG is becoming more mainstream. So I think these questions are going to be asked more and more. So I think it's just worth companies thinking about these considerations. I think rather than just being solely versed in the financial aspects. So I think really it's up for the investors to be bringing these to their investment companies, because why would a company maybe speak about this if they don't think that it's relevant to their business? So I think there's a big onus on the investor community to be able to raise these issues with the companies, so that these companies do actually know that these are important topics.
Yeah, exactly. John, do you kind of share that view?
Yeah, I think I pretty much echo everything that Chloe said there. Particularly, I think the social impacts and social aspects within ESG have tended to be sort of overlooked, at least in the last few years. I think part of that's kind of this drive towards sustainability as a kind of investing strategy, and that probably tends to focus more on the environmental side than it does the social and governance. I think we're seeing moves, certainly recognition in the industry that S factor has been overlooked of late. So hopefully we can kind of reshift the balance towards the social metrics as well. In terms of when we engage with companies that we're invested in, the engagements can really vary across all sorts of issues, depending on the context, the company, whether we're conducting a thematic engagement, for example, in which case we might focus solely on climate reporting or workforce reporting. So I think there's a growing number of investors out there that are kind of asking about the social topics, but sometimes the feedback from companies can still be quite depressing from time to time. We kind of ran an engagement stream last year focusing on modern slavery in the construction sector. And quite a lot of the companies that we were speaking to said that we were kind of the first investor that had ever asked them about the contents of their modern slavery statements, despite it being a very kind of high-risk sector. So I think that's kind of an indication of where we are, and that a lot more needs to be done in this area. But I think I'll kind of add that, generally speaking, when we speak to companies, they're very willing to actually engage on workforce topics and reporting. I think it's just from our side, it's been a failure to actually even ask the questions.
Yeah, and I guess the learning from this is that companies should also feel comfortable speaking to investors about which topics they're interested in as well, whether that be an IR or a sustainability person. Just getting on the phone and asking them, if these issues are important to their shareholders. And 9 out of 10 times, I guess they will be, right?
Yeah, no, I completely agree. I think some of the most kind of successful and sort of fulfilling engagements for us are where we almost act as a sounding board to some of the companies we're invested in. They'll kind of speak to us when it comes around to reporting time. What social, environmental, governance metrics are we kind of interested in? What do we want to see in reports? And also, in terms of company culture, ethics, all these kinds of things, we're really sort of very open to having those discussions with companies. And I think just the more open and kind of transparent the dialogue is between investors and the companies, the better.
Mm. Yeah, you touched on a really important topic there, and that is that workforce reporting is a very powerful tool to show that a company is interested in workforce issues. But I think this raises another issue for companies in that there are multiple reporting frameworks and the landscape can be quite confusing. So I put the question to you both as investors. What are the non-financial reporting frameworks that are important to you, and what are the metrics that they collect?
Yeah, sure. Shall I kick off with that?
Yeah, please, John.
Yeah, so I think as you say, that there can be kind of an overwhelming number of different metrics and disclosure platforms out there and kind of reporting frameworks. We tend to sort of to try and keep tabs on most of the sort of non-financial reporting frameworks, because they tend to help us both with our sort of screening process and as well as kind of guiding our engagements. So the WDI is really quite useful in that we can, because of the depth and the breadth of the issues that it covers, we can quite quickly see where there are gaps in disclosure, and we can look more closely for kind of poor performance in any of the workforce areas that the WDI tracks. And as I say, because the WDI is so kind of comprehensive, it's really kind of our one-stop shop to go for sort of social metrics. We also look at the corporate human rights benchmark. That tends to be a little more restricted for us because it only looks at a smaller number of sectors, and we might not have a great exposure across those sectors that it looks at. That said, if we're doing a deep dive into one of the sectors that it does look at, then something like the CHRB is very useful. On the environmental side, we use the CDP for climate disclosures, as well as the forestry and water related disclosures that they offer. I think you touched on it at the beginning, really, in terms of where the WDI and Share Action is kind of trying to position itself. And whenever we sort of talk to companies about the WDI and the importance of reporting, we definitely stress that we see this ourselves as kind of the CDP equivalent, but on the social side. Obviously, in terms of the number of companies that disclose the CDP, it's far higher than the WDI at the moment, but that's partly due to sort of the length of time that it's been around and the familiarity with it. So I think a lot of our work focuses, really on just getting companies to put as much emphasis on the social reporting as they do on the environmental and the climate reporting.
Yeah, and just echoing what John said there, so on the social side we'll use WDI and Corporate Human Rights Benchmark, but as John mentioned there, the Corporate Human Rights Benchmark is looking at certain sectors and industries, so not every sector is covered there. Also on the social side, we are signatories to FAIR and BB4, which are looking at different social issues and workforce or supply chain issues. These are mainly concerned with animal welfare, sustainable proteins and antibiotic use for livestock. So obviously only applicable to certain companies. And then on the environmental side, we also use the CDP, which is great because they look at a number of things, not just environmental reporting and greenhouse gases, but more focused issues such as water, forestry, and supply chains as well. And where we see CDP and WDI kind of similar is in that rather than just providing a framework for disclosure, which can lead to a lot of divergence in reporting, each company with WDI is asked the same questions. So for us, that's so useful because it makes comparison between companies so much easier, and the granularity of the questions as well is immeasurable. So there's also a number of non-financial reporting frameworks which are useful as well in themselves, but we also like to look to companies' non-financial reporting outside these frameworks. So we might go to their CSR report and its annual report as well, and just to see what they themselves are reporting.
Yeah, that's really interesting. I'm sure the companies on the line will be interested to hear that as well. Yeah, and CDP is definitely a model that we're trying to emulate, although it might take us a few years to reach the scale that they're at. But yeah, we are, we're trying. Bob, so I mean, I guess my next question, and I'll go to you, Chloe, first. Why social reporting is so important. Obviously, it goes deeper than companies being more transparent. Can you give us an indication about, what else it indicates?
Yeah, so it's obviously really important to us for the transparency angle in our investment, and it's really important because it shows that companies are thinking about these things. And we know not every company is perfect. No company is perfect in every single area. So a company can come to us and say, we don't have this data. And just being open and transparent and having that dialogue can go such a long way. And it's reassuring to us as investors that they are thinking about these things. But disclosure as well is just a really good way for companies to be able to differentiate itself from its peers. So as I mentioned before, with the WDI data, the same questions are asked for the companies. So it makes that comparison easier, and it's a good way for them to, differentiate itself from its peers. And I think as ESG grows as well in investment, good social reporters will be the ones that are winning investment, as some investors look to those that they might consider best in class and standing out here in terms of reporting. So it can help companies attract new investments over its competition. So I'd say use this to your advantage. We're also starting to hear more and more, especially with millennials, that they're taking the ethics of the company into consideration. and starting to really think about who they're working for. So it can be really important in attracting in talent. And I know that was a key consideration when I joined Castlefield, in that my interests and values are aligned with what we're doing here. And I think it's true for business to business as well, with companies wanting to work with like-minded companies. So it is really, of benefit to your brand and your reputation if you're seen as someone that's thinking about these issues and you're a good social reporter. And I think also as well, social reporting can have a really scalable impact. So your audience might be, as I mentioned, investors looking to allocate their capital. It might be employees and other businesses. So you've got to think about your audience when you're disclosing on things like this. Is that it's not just investors that are looking in this. So if you're reporting on these social issues, it can really have a scalable impact. And I think also as the internet's growing, and websites such as Glassdoor are growing as well, which looks obviously to its workforce. If companies aren't really considering its workforce and are not seeing them as key attributes to the business, they really open themselves up to the risk that they're going to have negative and public criticisms that's out there for everyone to see. So social reporting for us, I think, is, and the long and short of it, is just really important to show that companies are considering these issues.
John, what about you?
Yeah, I would echo really everything that's Chloe said. For us, it's really knowing about the real world impact of the companies that we're investing our clients' money in. Ultimately, we don't really want to be investing in companies with very poor workforce practices. So, the greater the disclosure in this respect, the better, really. So I sort of touched on earlier as well, when we have this transparency around maybe whether there are gaps in reporting at the moment, then we can kind of proactively work with investee companies to sort of understand what are the reasons for those gaps. Do they have the data, but they're just not sort of collecting it in a meaningful way? Are there kind of protocols and policies to ascertain the data in the first place not there yet? So we can kind of try and drive better practice, I think, in the companies that we invest in. I think something that's kind of creeping into the terminology that the investment industry uses really is this question of sort of financial materiality, and kind of linking ESG risk with financial risk to our investments. I think our sort of stance on that kind of stems from where we've come from as a company, with quite a strong ethical and responsible underpinning, in that we don't need the financial materiality of these issues to be kind of proved to us for us to take them seriously and to recognise that how a company is treating its workforce is important. So it's really about the kind of the quality of our portfolios. And if we can say, if we can take examples of companies we're investing in and say, these guys are paying a living wage, they're investing in, training and development for their staff, then that's kind of a story that we can, put out there and be proud to invest in.
Yeah, I think that's very true. And I think it's also important here to raise the issue of financial materiality, as that's a question that comes up time and again for us, owing to the kind of length and breadth of the survey. And for instance, recently I was talking to one IT company that asked me about the material relevance to the IT sector of reporting on health and safety data for its employees. And that kind of level of kind of understanding about, why all of these workforce issues are important may not be as obvious to some sectors or some companies. So it's great to hear that, we do have investors, and there are multiple investors out there who consider materiality in a broad sense almost, and who are looking at all different aspects of the workforce to make their investment decisions. So guys, I think without further ado then, let's jump into kind of the main topic of the webinar today, and that is the your top ESG picks for 2020. Chloe, maybe I'll go to you first. Do you have any kind of salient trends or topics that you're looking at the moment?
Yeah, so key topics for us this year include data use and privacy. A big topic for us as well is diversity and gender pay gap reporting, as we're signatories to another collaborative engagement, which is the 30% Club, and we ourselves hold us to the same standards, so we're signatories to the Women in Finance Charter. So we will look at diversity within our own organisation, and to this end, this is where we'll be looking at internal policies that companies employ, and this will include training and development, and so that our investee companies have this pipeline of talent which can bring up its own organisation. And this is where the WDI data really comes in handy, because training and development and data on diversity is really at quite a granular level within the data. We're also working, we have quite a close relationship with the Manchester Business School, so we're going to be working with them on the topic of modern slavery. And also the FRC's new stewardship code that's been revised from its 2012 code. So we're going to be working on our response there. And I think it's fair to say that the investment industry has come a long way in those 8 years since it's been revised, and it's pleasing to see that there's a stronger focus on the E and the S, with specific reference to workforce and diversity in the code there as well. So it's really important that we are, our companies are starting to think about this, because more and more people are employing the FRC's stewardship code, and if that's being highlighted as a particular issue, being ahead of the curve and thinking about these issues are really important. They're the main kind of topics that we're going to be engaging with companies on this year, and I think we're in a very fortunate position that we've been able to build really good relationships with our investment holdings, so hopefully it'll be a really good year for engagement.
Thanks, Chloe. I know diversity and inclusion is a big topic for a lot of investors, and we're also seeing kind of the growth of specific funds in terms of women in leadership, or the likes of the Happy at Work fund that some of our investors have set up. And again, just to touch on the convening power of the WDI in this, many of you will know that we recently held a roundtable in Paris on this kind of very topic, which brought together kind of 15 companies and 15 investors to talk about the recruitment, training, development, and retention of female employees from the boardroom to the shop floor. I guess, just on this as well, the WDI have kind of 17 independent metrics on diversity inclusion that in turn turnover by male and female staff, and also training broken up into male and female. So it is, I know, for example, Chloe, you do look at that data quite often when engaging with companies, and that's our aim really to bring. Yeah.
The data, even just the questions. So for companies that might be non-disclosures to the WDI, we will use that as a framework for our engagement, so we're able to put those questions to those non-disclosures, but then it obviously saves us so much time for those companies that are our disclosures. We can just go to those granular questions and get a real sense for how companies are thinking about diversity issues. And I think there's a growing body of research that shows the benefits to businesses in having a diverse workforce. It's not just one of those issues that people are raving about for no reason. There's actually a genuine business case for having a diverse workforce. It can play an important role in increasing innovation and attracting and retaining talent, as you mentioned there, and enhancing its reputation and brand. So, these questions that are being asked, they're being asked for, a genuine reason. It's not that we just are asking these questions just because for the sake of it. But yeah, the WDI's data is invaluable for the engagement that we're having on diversity.
And John, what about yourself?
Yep, so we've got a busy year coming up, I would say. We kind of have rolling engagements on a whole host of ESG topics, so board diversity, CDP disclosures, modern slavery, living wages, biodiversity, and some work we're doing with our banking sector holdings on fossil fuel financing. Personally, I'm kind of increasingly interested in using a framework and sort of an idea about facilitating a just transition to a net zero carbon economy. We're kind of working closely with a number of stakeholders, including some of our clients, a few academics, and a PRI working group in terms of establishing how exactly investors can kind of contribute to this just transition to a low carbon economy. I think this is kind of really attractive for me because it essentially meshes together the environmental and social aspects that we're looking at it when we screen and engage with companies in our portfolios. As we kind of touched on earlier, the social issues have, broadly speaking, been overlooked in favour of the environmental in recent years. So the just transition kind of puts social issues on the same footing as climate and environmental ones, which I think is such a useful sort of overarching framework when we're thinking about engagements kind of across the ESG space. I would really sort of echo again what Chloe was saying about the usefulness of the WDI in terms of framing these engagements and how we're looking at the key ESG topics in any given year. From a just transition perspective, when we're trying to establish whether companies are kind of contributing to that transition or are kind of holding up in some way, we're really interested in all of the workforce indicators that are out there, and sort of the more data that we can kind of get our hands on, the better. So we might be looking at training being provided to employees in kind of high-risk sectors that are going through a transition, executive pay ratios in terms of inequality and kind of living wage accreditation at the other end of that scale, accident rates in high-risk sectors, and increasingly human rights due diligence in supply chains, particularly for, if you think about electric vehicles, energy, battery storage, those kinds of things, that they're all exposed to these rare earth and variety of minerals, which generally are coming from countries where we like to have more of a sense that human rights are being respected. So I think we need to sort of take all of these things into account, and with that in mind, having a database like the WDI to fall back on, where we can access up-to-date workforce data, is just really useful.
Yeah, so unfortunately, when companies ask us what the most important metrics are that we collect, it's not really a straightforward answer, is it, John?
No, I think, as I say, particularly when we're trying to do our just transition work, we're really looking maybe for, I would say, because the data isn't out there at the moment, we're trying to find sort of a handful of metrics which we can track where reporting is kind of above average, and that can possibly offer sort of deeper insights into a company's sort of workforce culture than just a headline figure. So if we're looking at, I don't know, high number of accident rates or high turnover rate, might tell you that something's sort of culturally wrong with regards to health and safety or sort of employee well-being. If we can use the living wage as sort of an indicator, then living wage accreditation and not using kind of potentially exploitative workforce practices like 0 hours contracts is a kind of decent proxy for establishing how a company views its employees. But yeah, I think if you're asking whether a living wage is more important than keeping down accident rates, then I would kind of say you're asking the wrong question. They're both as important as each other.
Mm-hmm. Yeah.
Yeah, I just echo that. It's really not straightforward at all, and I do sympathise actually with companies when, you know, they have all these things to consider, and I'd say that all of the metrics that are currently asked by the WDI are important, and you know, this seems to be the general consensus. We have investor roundtables with other investor signatories of the WDI, and this has been something that has been discussed. You know, do we take out this or do we take out that? And the general consensus has been that actually all of these questions on workforce topics and the supply chain are very important. But that being said, I would say that in our analysis, there will be some metrics that we will engage to a much deeper level and give a stronger focus depending on the industry in which it operates. So, for example, in the retail space, the working conditions of its supply chain is an obvious one, given the Rana Plaza disaster. In the manufacturing industry, employee health and safety will definitely be a key focus there. I think what is quite useful is the SASB's financial materiality map that they have there. Yeah, so if companies are thinking about what metrics are the most important for investors, I would probably look to that, because that's very good at breaking down key areas for different sectors depending on, you know, where you operate. So I think that's a good starting point. But yeah, just to echo, sorry, that all these issues are important, but I guess sometimes I think we are realists in that we understand that there's only a certain amount of hours in a day, and you know, you have to start somewhere. So I'd say start with those ones that are most important to your business.
Fantastic, thanks, Chloe. Yeah, it's interesting. I mean, SASB definitely has, you know, a strong standing in the financial materiality aspect, and that's, you know, where it has developed all of its resources and research. We tend to kind of act as a more holistic framework, bridging the gap of, you know, of both financially material and also salient human rights issues as well. You know, questions that provoke, you know, answers in terms of workforce management, and also can provide a framework for, you know, a company trying to achieve SDG goals as well. So, you know, it's always a difficult balance getting the questions right, but we are attempting to do so. I would just say that our very dedicated research team is working on a survey review this year, which is the most comprehensive we've had to date, and that will involve a consultation with our investors and with companies as well. And I would just like to say, if anybody has been involved or would like to be involved in that, you can always email us afterwards with your thoughts. But yeah, the survey is an iterative process, and yeah, we are open for feedback as well. That's fantastic, guys. I just have one question more for you, and then which is more of a practical question, I guess. And then we can open to question and answers if we have any towards the end, and then yeah, we can finish up. I think something to leave companies with would be kind of practical steps. And I know, Chloe, you did mention adhering to the kind of SASB framework, but I guess more practical steps for starting on their workforce reporting journey, as it were. What do you suggest, Chloe?
Yeah, so like I just mentioned, if you're going to start somewhere, I'd say make a list of what are your biggest risk factors in the business and start there. And again, think of it from the perspective of materiality. If those issues were to materialise, what is the impact on the business? And that's not to say that the other issues aren't important and can be ignored. In fact, as I mentioned, we'll look at all the metrics under the WDI survey, but I think you have to take a pragmatic approach in that we understand we're in a world where we're looking at lots of different things, and social issues are just one part of it you have to report on, the environmental more so now, and governance, and that's not to mention the business side of things. So one thing that we'll do internally here when we're trying to prioritise our own work is look at the urgent / important matrix, and that can really help you to prioritise. And then I would just suggest that you set goals each year and think, okay, I want to focus on the supply chain this year and maybe something different next year. And I think once you've got that framework and groundwork in place, it does become much easier to report on each year. And as I mentioned earlier, the new UK Stewardship Code has a stronger focus on the social issues and outcomes as well, rather than just investors simply having policies in place. So investors who want to be seen more favourably in this area are going to want to show how they have engaged on these topics and evidence a meaningful result. So hopefully this will, in turn spur the question in this area, and companies will be able to get more of a sense of what metrics are important to their business. But just look at your business and think, what are the key risks, and start there, I would say.
Excellent, thanks Chloe. And John, finally, the last word to you.
I think I would really go along with Chloe there in terms of looking at risk factors, and I'm sure the companies on the call will know their businesses much better than any investor in terms of where those risk areas are in the workforce and supply chain. I think from a kind of practicality sense, I would say start with what's easiest, really. I think it can be quite easy to feel overwhelmed by the number of metrics that investors or the WDI or other frameworks are asking for. But the hardest step to take is always going to be the first one. So I think once you get that ball rolling, then it kind of snowballs from there, and the data will kind of will flow more freely. I think the WDI is quite useful in that respect because they categorise the questions, and you have to jump in if I'm using the wrong terminology, but I think it's foundation, and I can't remember the upper level, but I would say start with the foundation and kind of work up from there.
Yeah, that's great, John. Yeah, it's foundation, comprehensive, and intermediate and comprehensive with the questions, and they do vary by a degree of kind of difficulty or complexity. But yeah, that's fantastic. That's good advice. So we've just got a little bit of time, probably about 6 minutes for Q&A, and I will introduce my colleague here, Rosie McKenzie, who's the company engagement manager, who's been diligently looking over all of the technical difficulties and issues that we've had along the way, but to answer some of the questions.
Yeah, thanks, Sonia, and thanks, John and Chloe. It's been really interesting just listening. I've been lurking in the background, so it's been really interesting to listen to. Thank you very, very much. We've had some questions come through. Please do feel free to keep sending them. And as Sonia mentioned, if we don't get to them, then we'll email you a response, definitely. So the first one that came through is, why do you think that social issues have come or have played kind of second fiddle to environmental and governance issues up until this point? Is there anything you can put your finger on, John or Chloe? I don't mind who answers that.
Yeah, I can have a go.
Great, thank you.
Yeah, so I think possibly one of the reasons is that it's more difficult to actually kind of quantify and get your handle on the social issues as opposed to the environmental. It's easy to measure your emissions or your paper usage, but some of the issues that we're looking at on the social side are more sort of, they're less concrete in terms of something you can necessarily measure. I think that's probably one of the reasons why it's kind of slipped back. I think the other thing is really this drive towards sustainability from an environmental and climate perspective, and I think that has tended to lose the social aspect as it's gone along. I'm not sure if Chloe has any sort of thoughts either.
Yeah, I think I'd just reiterate the being able to measure it there as well. And I think with environmental reporting as well, it's kind of applicable to most companies, where social reporting, if we think social issues, it's such a fragmented area. When we talk social issues, we could be talking human rights, we could be talking supply chain, we could be talking company engagement. So I think with environmental reporting, being able to report on your carbon emissions, it applies to nearly every single business. So I think that's probably one of the main reasons why it has probably attracted more attention than the social.
Yeah, thank you both. I think that all makes a lot of sense. I think something we hear from the company side, and Anya and I, all the different companies, is that there has been up to this point, there has been a less clear business case as well. Obviously, we would all like companies to manage their workforce properly for moral reasons, but the business case has been less easy to prove than cutting greenhouse gas emissions as well. But that, as Chloe mentioned, has been discussed here, that's becoming more and more obvious now that there are clear-cut business reasons as well for managing work properly. And then just very quickly, if you could just to round out, we've got one question that probably does round things off nicely for us. So Castlefield and Edentree both agreed that the focus will be more on HR topics and sustainability issues for 2020. Do you see that is a general trend that goes beyond just your company?
Sorry, I missed the question there.
Sorry. I was just trying to summarise the question. That was, do you agree that the focus will be on HR topics more than sustainability issues for 2020?
HR topics more than sustainability, was that?
Yes, sorry, yes, that's it.
No, not necessarily. Sustainability is a very broad word that can capture a lot of things. So I wouldn't say that HR topics are a key focus. We are also looking at plastic use as well. So it's just one of many things.
Great, thank you, Chloe. John, I don't know if you have anything to add just in the last minute.
I would just agree with Chloe there, really. I think we're increasingly trying to put all of these issues, environmental, social, governance, on the same footing, really. So a focus on, for us at least, a focus on social HR issues that's not coming at expense of looking at sustainability. As Chloe said, for some people, sustainability will include HR anyway. So I don't think it's particularly clear cut in that sense. But no, I think generally speaking, we try and keep our engagements consistent across the ES and G.
That's great, thanks, John. And I think just on the hour, then we will we'll end the discussion. And just to thank everybody who attended, all of the registrants as well, and of course John and Chloe for their time on the webinar today, and thank you for participating. I think we covered a lot of ground, and hopefully it was informative to companies as it was to me and Rosie as well. Just to remind all companies that the webinar has been recorded, and we will send you a link that you can access at any stage. And if you have any further questions at all, please do just email myself or Rosie or the WDI inbox.
And we will get back, all the people whose questions we couldn't answer, we will email through directly.
Great. Well, yeah, just to thank everybody again, and yes, have a lovely evening.
Thanks, everyone.
Okay, thanks, Anya.
Thanks, John.